Pleasant good morning to everyone, and thank you again for being with us this Friday morning. I'm sure most, if not everyone, is thinking, thank God it's Friday. Well, you know, we do have a very power-packed day ahead for you, so we are sure that you will be kept in your seat and fully engaged just as you were yesterday. It is my distinct pleasure this morning to introduce our chair, Dalton Lee, who is going to make some brief opening remarks, and then we get directly into it. Dalton, thank you for joining us.
Thank you, Wendy. Thank you very much. And good morning to all of our attendees. And once again, thank you all for joining us today for our second day of CAB Conference 2021. We had an excellent day yesterday. The content was rich, the discussion lively and informative, presented by all knowledgeable and talented speakers and presenters. And we are definitely off to a bright and early start this morning, having just concluded our breakfast session facilitated by Mr. Robert Moncrief, who took us through a very timely discussion on the global minimum tax rates. I wish to thank Robert once again for his willingness and commitment to be with us this morning, as I'm certain he too had to start his day extra early to facilitate this session. As Wendy mentioned, we have a very packed schedule ahead of us. However, we have ensured to allow sufficient breaks between presentations so that all in attendance can make the most of the virtual sponsor booths. Our sponsors continue to place tremendous confidence in the success of CAB activities, and for this we are sincerely grateful. And I will just want to highlight our sponsors for you again. Our diamond sponsors are Howden, Hitachi Security Systems, and Republic EC Limited. Platinum sponsors Raymond James, IBIS Management Thunes, Infosys Finacle, and Phoenix International MC Systems. Our gold sponsors, Temenos, EY, JE Burgas and Company Limited, and Ictual. Our green sponsors were CRS, FATCA One, Firemines, and Sterling Asset Management. And to all of them, we say a hearty thank you very much for your continued support to us, even in these trying times. As Wendy mentioned yesterday, we have included a bit of comic relief and relaxation in today's agenda, and I invite you all to tune in to the lunchtime performance of Mr. Paul Keynes Douglas. Also, at the end of today's proceedings, we're determined to get your hands clapping, or at least a little foot tapping as we enjoy some musical renditions. Welcome once again to the second day of CAB Conference 2021, as we continue to explore the theme, Thriving Through the Unknown. And so with that, I'll turn it back over to Wendy to moderate our first session. Thank you.
Thank you, Dalton. And what an honor and a pleasure it is for me to introduce 4 of our 5 consortium members who would have led the acquisition of one of the international banks in the Caribbean region. Today, we are joined by Mr. Dalton Lee, representing or chairman of the Bank of Montserrat, Ms. Joanna Charles, General Manager, ACB Caribbean, Mr. Everette Martin, General Manager, Bank of Nevis, and Mrs. Annette Lestrade. A warm welcome to you all.
Thank you, Wendy.
Great to see you all. Thank you again so much for being present with us this morning. Annette, you are very distinctively dressed. Perhaps I'll give you a moment just to say what that's all about. Tell us a little bit about it. And I think one of our video captioned at the beginning would have tied into that as well.
Well, Wendy, you know, in Dominica, we are very much in tune with our culture. And so today is Journée Creole. The whole week was Journée Creole week. And today culminates in our wearing of our national wear. So our independence, as you know, is on the 3rd of November. So we're just all very excited. For the entire month, we're all dressed up, and that's the culmination of our Journée Creole week.
Fantastic. Lovely, lovely, lovely. I should have adorned something because in Saint Lucia, we are also celebrating Journée Creole on Sunday. Unfortunately, with, COVID, it's going to be a lockdown Sunday, but we plan on making the very most of it as best as we can and as safely as we can.
Yeah, sure.
So with that, let's get into it. It's really wonderful to see you all. And this has been one of perhaps the most talked about and celebrated events amongst us as bankers. Yesterday, we had the privilege as well of speaking to some of our industry leaders on other fantastic and phenomenal things that are happening. But let's talk a little bit about the acquisition. What has been your experience as far as decision-making? What was the driving factor that led you to this point? So we've heard from Dalton and we've heard from Annette. So perhaps, Everette, can I drop you in the hot seat this morning?
Yes, thank you very much, Wendy, and good morning to all. Pleasure to be part of this panel and to discuss this whole acquisition once again. For the Bank of Nevis, this decision to participate in the acquisition of the Royal Bank of Canada and RBTT was indeed a strategic move. For some time now, the Bank of Nevis has considered entering into the St. Kitts market. As you may know, the Bank of Nevis has, since 1985, has actually only operated on the island of Nevis. And it was our view that at some point we would wish to enter into the St. Kitts market, of course, St. Kitts and Nevis being one federation. And so when the opportunity came along, we decided that here was the perfect opportunity for us to purchase the RBC operation in St. Kitts, and indeed by extension the RBTT, which is in Nevis, in order for us to get a footprint into the St. Kitts market. So that was the decision making behind the whole concept of being involved in this acquisition.
Okay, fantastic. Joanna, would it have been a similar catalyst for you in Antigua? Sorry, you're muted. Sorry.
Yes, sorry. Good morning, everyone. Good morning, my colleagues. Annette, welcome.
Hi.
Nice to see you.
You too.
It's always a pleasure to be at CAB, attending the conference, albeit virtually this year. But I think the richness of the presentations and I think the takeaways will not be any different. So congratulations so far on what seems to be a very good conference. About 3 years ago, which is when I started my journey at ACB, we thought that, we needed something fresh. growing the business organically seemed to have been a challenge. So we recognized that there was a need to do, how would we grow the business inorganically without, kind of like a big acquisition or a merger. So in developing our strat plan, we decided to do a 3-year plan initially. And in recognizing the challenges of growing the business, as I said, organically, we had an acquisition or acquisitions as part of one of our strategic intents. And I would say that, sometimes I speak about the power of intentions and, sometimes I go off on that a bit, but I think it's always good to plan because at the time when it came, I would say that we were more or less in a state of readiness for it. And I think that would have been the catalyst for us being part of this acquisition and the consortium. And I must go back and say thanks to Jonathan, who initiated all of that and made it happen for us, at least in terms of recognizing that RBC was in the market to sell, and also for, I don't know, he seemed to have handpicked us. I'd like to think that he did that. And here we are today. So, yes.
Okay, fantastic. So purposeful planning, deliberate planning, and ensuring that you're in the right space at the right time. Annette, you have recently joined the Indigenous banking fold. So perhaps you'll take a minute to introduce yourself to your new family members and give us a little insight from your perspective on what would have been the catalyst in Dominica. Okay.
So I think I know Joanna as well as Everette from my previous life. And so Annette Lestrade, as you guys know, I worked with an international bank for over 30 years. I actually was with Barclays first, and then Bank Française. I don't know if you remember Bank Française, because National Bank acquired Bank Française as well, and then Scotiabank. So actually, when we sat and reflected a bit on the acquisition, I thought, I have come here, and the banks that I worked with before are all here with me right now, right? So that's kind of interesting, because we're now going to acquire FCIB. Coming into the Indigenous Bank was quite an experience for me, because, as you know, Wendy, when we work in an international bank, everything is handed down to you. But it was a very different experience. And for me, it was even a more satisfying experience, because you get to do stuff from scratch. And so you see what you have actually, you can see things being formed, being developed, being just emerging in front of you. So for me, that was really a very, very unique and different experience, very exciting. I think if it was something that I had done a few years ago, it would not have been as exciting, but having been through the international banking experience and coming now into the Indigenous Bank and getting the benefit of the international experience, and now being with the Indigenous Bank, it is just like a marriage made in heaven, because I actually am very, very thrilled, very excited about what's lying, what should come ahead, because the future looks extremely, extremely bright for National Bank. I mean, a lot of people have thought it was quite a big challenge to come after having bought RBC and then now coming to FCIB. But you know what? Based on the objectives of the central bank, I think that we are right in line with our own strategic objectives to improve the landscape of banking in Dominica.
Fantastic. That certainly is very encouraging news when we see that our Indigenous banks, otherwise our small banks, our home banks, are able to make these massive leaps and acquire international agencies. Certainly in my time as a banker, this is something that we never would have considered even a possibility. So kudos to you all sitting here today. Dalton, without fail, perhaps you will share as well your experience in the acquisition process.
Thank you, Wendy. First, let me join with Joanna in saying a heartfelt thank you to Jonathan, who, as she said, had the kernel of an idea that when at our CEO conference earlier this year, he mentioned that he was standing around a cocktail table with, I know Everette was there at the time, and a couple of other leaders from the OECS Indigenous Banking Group, and that's where the first idea came about. But he was the one that has has led us through this acquisition thus far. From Bank of Montserrat's perspective, I think we looked at it as an opportunity to grow, just like with Bank of Nevis, but with a different vision. I think with our vision was to grow so that we could be of sufficient size so that we could adequately participate in the redevelopment of Montserrat. Because, being a relatively small indigenous bank, and the major projects of redevelopment, whether it be from the private sector or from the government of Montserrat, the funding always would come from outside the country. And, now we're in a place where we can actively participate, and we've just signed a deal where we're funding the construction of a major accommodation building for the financial services sector in Montserrat. And, we're in conversations with doing similar things with major projects and infrastructure projects on the island. And so we see this as kind of an extension of, who we are and why we came into fruition in the first place, to provide the financial backbone to our small and and growing, I'd love to think, island and economy. So we were very we were ready for the opportunity, and so we were willing participants, and thus far, we're pleased that we were able to participate.
Okay, fantastic. So in all instances, I think what we heard coming out as a common theme was the need to grow beyond the size that we were then. What I want to explore a little bit this morning with you is what has the post-close impact been to the business? Have you begun to see the benefits that you anticipated accruing? Dalton, since you're still on screen, why don't you go ahead with that one?
Well, Wendy, the process as it was agreed to, given that there are 5 of us, and I think there were 7 or 8 different entities that we were acquiring. The process is that we would all go through, start transition at the same time, but we would do conversion in a progressive manner. And fortunately or unfortunately, Bank of Montserrat went first. And so we converted back in July, I think it was on June 17th. And that process it went relatively smoothly. I think that we didn't have any of the hiccups of, individuals not being able to get to their funds. All that happened smoothly. I think that because the conversion for us took longer than we had planned in our initial planning, the benefits that we had planned to realize in this fiscal year have been slow to materialize. I think most people who have experience with transactions will tell you that the first year you have a lot of kind of one-time only expenses associated with the transaction that you have to absorb. And then once you get those out of the way, that's when you see the true potential of the anticipated synergies and increased business. And so we're in the process of closing out, or we've just closed out our financial year. And so now we're just starting the new financial year, in which we anticipate that we will see the full benefit over the next 12 months of that. And I think we have seen, however, clearly, increased transactions, increased clients in our banking hall, and just as we had hoped, an increased interest in the bank funding projects, not only within Montserrat but also within the region. We've been reached out to by entities to provide funding in that. So I think it's overall it has raised the profile of the bank, and we anticipate that in the short to medium term we will see significant growth for the bank.
Okay, fantastic. So it sounds like it's beginning to cushion well. Annette, what about you? What, if anything, have you seen as a resulting factor of the acquisition?
Well, our experience has been very, very similar with to Dalton's. I would just add to, especially he spoke at the end about the raising the profile of the bank, because we have seen that. We have seen a lot of interest now in the National Bank, and it also helps us to position us in a better place where our correspondent banks are concerned, because that is an issue for our region. So I think that even with the further acquisition of FCIB, it really does place us in a much better position strategically. We have also seen too that in the island, where we have not experienced any negative effects or a negative backlash from the fact that we acquired RBC. We haven't had any loss of any of our customers, any material loss of customers and so on. So pretty much, I think we are on the right track.
Okay, so Annette, you alluded to correspondent banking. That is something that I would want to take up with everyone. So let me allow Joanna to share her experience, and then we'll come back to that, because I think that's a critical point that we need to spend a little bit of time talking about as well. Okay, thank you for that. Sorry, you're muted, Joe. You're muted.
I keep muting myself. Yes, our experience has been similar to Dalton and Annette, in that the benefits that we expected to derive from this acquisition is kind of slow in coming. And as Dalton said, I think maybe our expectations were too high for such a short period. And we've recognized that, and also preparing for, as far as we're concerned, year one will be post-conversion, where we think, the benefit, we will really start to see benefits from this acquisition. But there are some positives, and I think while the acquisition, I think, was disruptive in a sense, and I think what's happening in the entire OECS now with the international banks exiting the market, I think it's transformational. And I think that is good. I like transformation. I think it's disruptive, but I think it's also transformational. And transformational for the indigenous banking sector, in that we get to play in the market in a way that we never could before, or probably never dreamed of doing before. So customers we didn't have access to before, we now have access to them. And RBC had a tendency to have kind of, when I say old business, customers who've been in business for a very long time, we call it old money. And these customers, when they started with the foreign banks, because I guess at the time there weren't any indigenous banks way back then. So we now have access to that, and we've seen an increase in, I think, the wire business. We've seen an exponential growth in that, foreign exchange revenue, and I think by doing so, it has strengthened our relationship with our correspondent banks. So that is a big plus for us. As you may know or may not know, ACB also acquired RBC in Grenada. We acquired 62% of the shares that RBC had in RBTT Grenada. So ACB now owns that, and we've rebranded it ACB. And what we've seen is that it has given us an opportunity to diversify our revenue streams, diversify risk. We can now, among ourselves, like syndicate loans. What we've also seen is a significant increase in liquidity. So now we have to come up with a we've developed a plan about how we can invest those funds to be able to get a good return. So I think we've seen improvements in liquidity, we've seen improvements in capital, we've seen an increase in our customer base. Forces as an offshoot of the indigenous banks, I think would reap significant rewards from that acquisition, and that all of the RBC credit card business and debit card business is now passed through Forces. So that would be a significant benefit to them. And we benefit on the other end by being shareholders of Forces. So I'd say, however, though, another thing I want to add is that we've gotten access to skills that we probably would have had to a very difficult time going out in the market to acquire. There were some positions that remained vacant for a while, and we were able to fill them with some additional resources that we got from RBC. But it kind of forces you to become creative. A lot of us acquired additional buildings, additional properties. These come with costs. So you have to think of, how do you rationalize all of those properties that you have? How do you rationalize all of the resources that you have? And in a way that you can get savings from doing that. So there's a lot of creativity. I think for us, it kind of completes our structure, because we had redone our whole organizational structure, but there were still gaps in there. So with the acquisition, we were able to fill those. So I would say all around there were significant benefits. It also allows us to expand our base in Grenada, because RBC in Grenada targeted more of a kind of niche elite type of customer. And you recognize the market is too small to be able to have do that kind of niche targeting and so on. So we want to be able to expand and be an even player in the market with we have some big players there. We have Republic Bank, we have Grenada Cooperative Bank. And so we will be small, but I think we're looking to be a very formidable force in that market, because I think we're ready. The 9 months to conversion has, kind of allowed us to prepare adequately for us to take the market by storm. So, Ms. Diali, we coming for you in Grenada. Look out.
Fantastic. I love this. Yesterday we heard a challenge thrown out in one of our panels, and today we're hearing one again. So small, powerful, and dynamic is what I'm hearing as I listen to you all this morning. Yeah. Everette, over to you. Has there been any difference, big or small, in the experiences already shared?
Thanks, Wendy. I think the experience has been similar. To some extent, we similar to Bank of Montserrat, we have completed our conversion. Our conversion actually took place in September, early September, 11th to the 12th. And arising out of the conversion, we would have had some challenges. You had to change over to your the ATMs, for example. We had to change out the credit cards and the debit cards. And so for us, there were some challenges there. Customers, had to change over to the new technology, a different way of doing things from RBC. And so, it took some time for them to understand the differences for Bank of Nevis from RBC. But I think things are settling down. We still have one or two challenges that we are seeking to deal with, particular things like the online banking, for example. But it's settling down. I think similar to Dalton as well. One of the things that you recognize is the expense. So you would have seen a one-time expense in certain areas, but we believe that as things settle down, and as we continue to grow and develop the business, we expect to reap some benefits. One of there are a couple of benefits for us. I mean, for example, we have been able to expand our corporate business portfolio. RBC had a significant corporate business in St. Kitts, And so we have been able to benefit from that. What it has done is that it has forced us to change our strategy and to rethink and reimagine how we deal with our corporate customers, because these are large corporate customers. And so from that perspective, I think that has certainly been a benefit. As the others have said, it has raised the profile of the institution. There's a lot more interest in the institution. There's a lot more energy around the whole Bank of Nevis, particularly in St. Kitts. We are seeing people coming to open new accounts. We get a lot of calls. We are now planning partnerships with developers in terms of having housing projects. One of the other major things for us, and that has been very critical, is our credit card business and merchant business. The Bank of Nevis, throughout this whole process, was actually engaged in changing our credit cards. We've changed our credit cards to contactless credit cards. Similarly, our debit cards, we changed those. And we are now printing our credit and debit cards in-house. And so that has been a major change for us, because what it has done is that it has created some level of efficiency, allowing us to get those credit and debit cards more quickly into our customers' hands. And we have also been able to now get our merchants to accept American Express and Discover cards. And that is a major achievement for our customers. We have also seen, of course, an increase in wire transactions. And as Joanna said, there's been an increase in liquidity. And coming with that increase in liquidity has then forced us to determine from a strategic perspective, how do we now utilize this liquidity? And so what we have been doing is to look at, for example, loan syndication. We recognize that we have a limited capital, and of course, later down, we would want to look at how do we increase our capital. But for now, what we have been doing is to see how can we partner, how can we collaborate with the same members of the consortium to grant larger loan facilities. And so we've been talking about loan syndication. It has also forced us as well to look at our organizational structure, and that right now we are expecting to finish that shortly. It has also, along with that whole organizational transformation and restructuring, forced us as well to look at things like succession planning. And so I think overall, I would say that it has reaped tremendous benefit for us, because it has forced us now to look at, from a strategic perspective, how do we position the bank going forward into the future. And so we are very excited about this acquisition, and we certainly believe that while in the short term we're not going to see the financial benefit, certainly going forward in the next 2 to 3 years, we expect to start reaping those benefits.
Yeah.
Fantastic. It really is very interesting, having had those discussions yesterday with the regulators who spoke about the need for innovation and creativity. We also had the Honorable Prime Minister Mia Mottley. I'm sure most, if not all of you, would have heard her address delivered on Wednesday in Barbados, as well as her opening remarks to us yesterday morning. And to top that off as well, our opening ceremony on Wednesday evening, where Didicus Jules also somewhat summoned the banking sector to innovate and be creative. Joanna mentioned a few things that came, almost literally off the discussions with panels yesterday around managing resources in a new and innovative way, and perhaps also looking at the resources and the titles, the type of persons we have currently as bankers, and perhaps having to redetermine whether or not we still have the right fit in terms of personnel. One of the things that they said is perhaps we would need technology experts coming into the fold. And I know that with the with the acquisition, one of the things that you would need to be cognizant of and perhaps working towards as well is how do you merge the technology, or which which one you keep, which one you toss out. Dalton, I see you smiling, so let me allow you the mic.
Yeah, thank you, Wendy. As everyone was speaking, given that I'd gone first, I made it the note of technology for Bank of Montserrat because for us, we were laggards in the whole digital conversion, but with the acquisition, we had to leapfrog, in our transition to digital because the experience that the former RBC customers had was at one level, and we didn't want them to come over to Bank of Montserrat and feel as if they were taking a step backwards. And so we had to make that investment in technology. And I would say this, I know that GM Taylor is on, and I know he probably would agree as well. I mean, throughout this whole process, yes, the individuals who had responsibility for the line business and oversaw the business operations conversion, and the HR conversion and the legal conversion were all important. But if I was to place, who was by far the most important cog in this whole wheel, and I think it's definitely was our IT department. And I think it is so true because as we look around, and I think just listening to yesterday, and I was absolutely blown away by what the CEO of NCB in Jamaica said when he said 3% of his transactions are done in branch. 3% are done in branch. And, I think, if we're being honest, most of us would love to get to 30%, being done in branch. And so the need for technology, and the reliance, the more reliance on technology is where we find ourselves. I mean, if you think about it from all the things that Everette and Joanna and Annette have spoken about, whether they be ATM cards, whether they be credit cards, whether they be the merchant business, whether they be wire transfers, all of these are technology based. And if you have any hiccups in any of that, the impact to the bank, the reputational damage to the bank, it would be severe. And so I think we now we have at the Bank of Montserrat on a quarterly basis at the board level, we have a review of all of our technological projects. How are we doing with the app? How are we doing with our POS? How are we doing with the internal technology upgrades that we want to do to create efficiencies within the bank? And so just like David mentioned yesterday, that this whole cybersecurity and technology needs to be from the top down. We have now started doing that at Bank of Montserrat. So yes, it is clearly one of the most important aspects of not only of the conversion, but of our way forward and the way that we could be more efficient.
Yeah, absolutely. I know that people already have some questions, but I really have some questions that I want to get in there as well. I'm going to be a little selfish. Bear with me for a few more minutes, but get your questions queued up, please. Annette, I feel the need to ask this question of you. I'm going to jump to Everette and Joanna with different questions because I want to keep it going. And I think because you are looking down the barrel of another acquisition already, it then means that you're basically juggling 3 heritage systems. So this is a unique consideration for you. Can you share a little bit about that with us?
As a matter of fact, when we had signed the agreement, one of the first things that we focused on as a team was on our IT. because we realize that if we are to become best in class, especially because right now we're going to be acquiring another bank, and there is always the hint that, okay, we're going to have a monopoly in the market and so on, that we need to ensure that our customers feel confident in our ability to provide them with the services that they need and that they deserve. So whilst we are waiting for our approval, this is some of the things that we are actually actively looking at our technology, getting as much information as we can about what exists out there in the market, and not only, and taking our customers to the next level. So we don't even want to be on the same level as the FCIB if they happen to have been or had systems that will maybe comparable or even a little better than ours. We want to take our customers to the next level. So when they get in with us, that they will not they will feel comfortable, they will feel confident. Because in banking it's about trust and confidence. We are actually looking externally to get all the support that we can, so that when we transition, that the transition will be smooth, just like it was with the Royal Bank, but also that we can take them to the next level. So we are looking, our online banking platform is key to that. Our internal systems, our processes and procedures, we're actually revisiting all of those as we speak. We're also looking at our organizational structure, because we need to onboard additional customers. So we need to ensure that we are more efficient in the way we do things. So it's actually, as I mentioned before, I like to use the word exciting, but it's also challenging. And there's a lot of opportunity there. But I have to mention, just coming off what Dalton said, IT has been the engine. IT has been so extraordinary in all of this. And when you look at how we have quite a young IT department, and when we look at how efficient they have been, how innovative they have been, how creative they have been, we just know that we are really set a really good foundation for us to provide our customers, our employees, and even our shareholders with a really good future here in Dominica, with the addition of the First Caribbean Bank in the next few months. So it's all about, I think, making sure that you have the technology and making sure that you not just bare minimum. We have to think big, because whilst it might seem that we only have maybe about 2 banks left in Dominica, we have a very broad credit union, and credit unions are very big in Dominica. It is probably, after the National Bank, the second largest financial institution on the island. And so we are thinking that whilst it might look or it might seem, but we are not preparing ourselves for just this market, because we spoke about syndicated loans. So we're not preparing ourselves predominantly for this market. We're preparing ourselves so that we can be really big competitors in the financial arena. So I think that we're onto some really good things in the future here with National Bank.
All right, fantastic. Thank you for sharing that. On the topic of loan syndication, I know that Joanna and Everette, you both spoke about it a little bit. Help us to understand, what is the game plan? How do you see the ability to syndicate now taking us perhaps even a further step or leap forward throughout the jurisdiction? Everette, let's start with you. Joanna, we come to you immediately after.
Thanks, Wendy. As I said, part of the strategic plan is to certainly look at loan syndication. We have had interest in terms of significant projects, which of course we would not wish to do on our own, not just from a risk perspective. Of course, there's also the capital issue, but also from a risk perspective. And in some instances, we have seen where the proposals or the proposed facilities may actually cover more than one jurisdiction. And so what we have done is to reach out to our consortium members, partners, to see whether or not that is something that we certainly could consider in terms of a loan syndication. Our partners in the consortium, they have also reached out to us as well about potential loan syndication, where there are large projects in their countries that they are unable to do it on their own. And so I believe that this is important, because what it does is that it allows us as a consortium to continue that collaboration that was started with the acquisition. And what it also does is that it allows us to compete with the larger institutions. So if you have, for example, a CIBC First Caribbean, who may be able to, on their own, to take on a $45 million project, you may not, on one island, you may not find an indigenous bank that may wish to undertake that project on its own. And so what it means is that now, as a consortium, we could collaborate and say, listen, we can compete at the highest level for a $45 million loan, a $60 million loan, a $100 million loan, because we can then syndicate that loan among the members of the consortium. So yeah, I think this is a very strategic for us going forward.
Thank you, Everette. Over to you, Joanna.
Yeah, Wendy, I think Everette has covered the topic quite eloquently. I don't think I have anything more to add, but I want to go back to our topic for this segment, which is a case for collaboration. And one of the things we grapple with in I think throughout the indigenous banking sector is the cost of technology. And I'm thinking, how can we come together? Because all of us use a lot of the same service providers. And sometimes our needs are a lot greater or more advanced than what the technology provider can give us. So what we found is that, how do we leverage those relationships we have with our service providers to get better pricing? How can we, all connect to one platform, and all of us just, have links from that platform to be able to operate our own business? So I'm saying, let us take the collaboration discussion one step further and make it work for us. Cost of doing, when I look at my IT in terms of the annual licenses that we pay, that to me is one of the biggest costs we all have in our income statement. And it's maybe as high as staff costs. So you might think, okay, the move to technology might help you reduce your human resource expenditure. We haven't seen that happen, because the rate at which the technology providers provide us with what we need to be able to downsize on the other end, they're not happening at the same time. So that is a challenge we have. And I think as indigenous bankers in the entire sector, I think we need to challenge those service providers. We need them to understand our needs. So if you say you are players, you're in the relationship with us, you are there to see us, do well and thrive and so on, I think it's a partnership. I mean, if you look at the conversion, I mean, the cost that we are incurring just for, I feel as though it's everybody just seeing that as an opportunity for them to just milk the situation, because we are getting costs that we were not aware of before. Mm-hmm. Everybody's just coming, and they know they have you by your, I don't want to say the word, because at this late stage, you cannot say no. If you say no, they'll tell you, sorry, you can't meet your conversion deadline. Mm-hmm. And we've seen that. So I think we need to find a way of leveraging not only the five of us, but I think the entire indigenous banking sector, to see how we can leverage technology to work better for us. I don't think it's working for us effectively or efficiently. So that is why I want to say that let us not see the acquisition and all of us coming together just on the just for syndicated loans. I think there's a lot other things. I think we need to all sit down and think of, okay, where else can we get synergies? Where else can we get benefits? And that is where I want the conversation to go. On the question of correspondent banking, just to go back a bit, not to talk about all the other things, but just to say that I remember a few years ago when the whole de-risking thing started, and it was Bank of New York was the main correspondent bank for my former employer. Because Republic Bank had, I think the bank at risk was, I think one of a subsidiary in Saint Vincent. Bank of New York, because Republic Bank owned, I think, 20% in Bank of Saint Lucia at the time, they looked at us as a whole. And because of that, they looked at the entire value of the relationship rather than looking at it on a single basis. And because of that, we retained that relationship that we had with Bank of New York at the time. That is a key factor in them making that decision. So then again, I go back to the topic, a case for collaboration. How we have smaller banks among us. How can we create that type of synergy, whether it is through some of us having some type of ownership, and whether that would be consideration for a correspondent bank in determining whether, because from what I can see, and I said a few days earlier, it really is a numbers game for the correspondent bank. They look at the amount of due diligence and stuff that they have to do and the rewards that they will get from it. I think, of course, they would want to be able to earn enough revenue to be able to cover those costs. So I think that's another discussion. So I'm saying there are strategic decisions at a much higher level that we need to think about, and not just the operational aspect of it. I think the operational aspect is critical, but let's take it to another level and let's start to have discussions, and not just the five of us, as I said, but I think bring it to the wider indigenous. And I think we have an excellent opportunity to start that now.
Fantastic. Thank you for that, Joanna. And that really is the critical point that we were coming to. What's next? I do think that we have a question, so I will ask the team to publish that question for us from the audience. And then, of course, is there any opportunity for additional benefit coming out of the consortium? So the question is, this may be a bit controversial, but have we reached a point where there is no longer a role for international banks? Anyone want to jump in with that one?
I can take it.
Sure.
I mean, I have nothing against competition. I think when there's competition, it allows, more opportunities probably for customers. And it kind of keeps you on your toes. It prevents you from becoming complacent, all the benefits of competition. But I think if they are to come back into the market, I think there has to be, the regulator, I think, has to play a greater role, because even with this acquisition, a lot of the branches of Royal Bank didn't have capital. So we saw a reduction in capital by taking on these additional loans once you risk weighted them. So that is one other issue. For us, for Grenada had capital, so that worked well for us in that instance. So I think the regulator, I think, has to have some kind of restrictions, because I know they didn't provide capital for all of their branches. The other thing, to my understanding, is that in Canada, anybody can set up a bank in Canada, but you cannot raise deposits from the public. I'm saying that is something that we need, and I think it was the late Dwight Venner, conference we had, he brought that to our attention. So I don't think it should be a free for all. I think there should be some restrictions. And at least now, I think the increased profits that we make is going to recirculate into the economy. And I know everybody was, touting about, Prime Minister Mia Mottley's comments and so on. But I think if there's more money circulating in our economy, then I think there are a lot of things that can happen. One, I think you might have more banks wanting to list on the OECS, on the EC stock exchange. And of course, people now want to buy shares because the banks are more profitable. They can get return on their dividends. So I think there's need for the stock market itself to revamp its entire operations to make that happen, and remove a lot of the onerous conditions they have for enlisting. So there are, and the Jamaica example is an excellent one that we can probably adopt. So I'm saying there's a lot of possibility. And the fact that probably the profits are not being exported overseas, they remain here. We can then, as Everette said, once you start to make more money, it increases your capital. You can take more risks. You can lend larger loans. It's not that we don't want to lend money. We have restrictions. We have more provisions that have to be made. So there's a lot of things coming at you. There's IFRS 9 that came, and we had to change how we accounted for certain things. So yes, somebody can say the banks are not lending, but when you lend in depositors' money. And at the end of the day, that money is guaranteed and you have to find a way to repay that money. So it's important that we understand the big picture. But yes, and to make it short, I would say yes, I think there's a role for anybody that wants to come back into the market. But I think there has to be some restrictions in terms of how they re-enter the market or how they enter the market.
Okay, fantastic. Thank you for that. Is there anyone who wants to add to that response on the panel? Not really? Okay. So let's talk a little bit about, and we only have 6 minutes left. If you were to pinpoint the one biggest area of concern or consideration for anyone else who's considering a venture such as this, what would your advice be? Dalton, let's start with you.
I was hoping you would start with Everette, because I know he has a very long list. So, but I will go ahead and start. I think there are a couple of things. I think at the beginning, you have to be. I would say you have to be committed to seeing the transaction through to the end. Because I think there will be moments. I know those of us who have been part of this transaction from the beginning know the exact moments I'm referring to, when we would, we may think, nah, it's just not worth it. We need to walk away from it because, there's this bump in the road, or there's that, kind of speed bump that we run into. And so I think, having the intestinal fortitude to persevere and to be creative, to find solutions around the obstacles that you run into inevitably. I think that's one thing. The other thing that I would say is, and I know I'm probably taking this off of Everette's list, because I could remember distinctly the conversations in Miami. We have to be very, very clear about the costs involved in doing the transaction. Joanna mentioned, that we're seeing costs that we didn't know we didn't anticipate, and I think, but you don't take for granted that the costs that are initially outlined are going to be the only costs that you incur during this transaction and during any transaction, and I think. The other thing that we've learned, and then I'll stop and I'll let the others go, but I think the other thing that we have learned is, and the others may agree or disagree, is I don't think you can start early enough in the process of trying to get all of the regulatory approvals done, because without those, it doesn't matter. It really doesn't matter. I mean, we were fortunate in that we started off ahead with the ECCB, and so we went down that road fairly early. But I think history has shown that that's only one of the steps in the regulatory process, or one of the hurdles of the regulatory process that we needed to get over. And so I would say, be committed. Be very careful and very, very, very diligent in, looking at the expenses around the transaction and planning as far in advance and as completely as possible for regulatory approvals.
Okay, thank you, Dalton. Annette?
Yeah. Wendy, some of the things that we had done with the RBC transition was that we focused heavily on ensuring that we had a really good transition team, right? That is really, really key. But your transition team must not only be made up of your staff, but have a couple of them from the bank that you're acquiring, because that really helps you to understand the systems better and understand the processes and so on. And that helps for a better transition, I think, as well. And you also have to remember that they're coming into a new culture. So you are starting to socialize them into your new culture. You really need to keep close to them because you don't want to lose that institutional memory. You don't want to lose the fact that you can get some best practices from them. It's always good to listen to the feedback, especially being an indigenous bank and you have the international bank experience. You do not want to lose that. You want to marry the two. You want to get a better product at the end of the day. IT has to be on board from the get-go. It's really very, very critical that you have them there to ensure the smooth transition or when you actually do your conversion. So that is actually is key. But even before you get to that stage, your legal and your accounting teams have to be on board, have to be astute, especially legal, because you can imagine that you might have different agreements and so on that need to be reviewed, because you want, when you have onboarded your customers, if there's anything that's materially different to what you do at your own bank, that you have the communication go out quickly, and so that you don't have that gap that makes it look like you're unprofessional and you just start to lose credibility and so on with your customers, because that is key. You can't continue in business if you don't have the customers. And the fact that you took on this new bank is because you expect to be more profitable. You don't want to lose your profitable customers. So engaging your profitable customers initially, as soon as you have signed and you're ready for your conversion, is key. It is key because, as you know, a lot of our customers who have been accustomed to the international bank, they have a bit of ambivalence about dealing with an indigenous bank. So you have to give them that comfort level to ensure that you remain relevant, and also that they understand that you are going to do the best that you can do to ensure that the standards that they're accustomed to, that you not only meet them but you exceed them. And basically, yeah, that's about it. But HR, I would say, ensure that your HR conversion team is on board and that you have those relationships, and that you nurture those relationships from early. You continuous feedback, continuous monitoring as well. That you have your legal and your accounting, and even I even forgot to mention to you too that in terms of the central bank and the Ministry of Finance, your approval and your vesting orders. Those two are key. So you keep and you maintain those good cordial relationships with those as well. So basically, I mean, that's what we have done. That's really has helped us to ensure that transition has been smooth. We have done a very good job of the conversion. So that's why we think that for FCIB we should even be in a better position to for a smoother transition.
Okay, fantastic. I think your response has actually prompted a question from the audience, and I know that we are on time. However, I do want to give the opportunity to allow this question to be shared, Annette. So can we have that question posted, please? The question goes, I note the efficiencies that they would have gained. However, I'd like to know how they managed the changing or merged cultures, and also how was the change management executed?
It is very important initially when you are dealing with two different cultures that you bring together the two cultures together. So from my understanding, there were several meetings with HR and the employees, so they could understand. They had a lot of questions. We actually had some questions I prepared in advance so that we could have answered them. They had their own questions as well, but we also prepared questions based on our past experience so that they knew that it was not about just bringing you on board, but also having that conversation, because they were concerned about what would their levels be, what would the impact be on their salaries, what about their benefits, right? So these are the types of questions that we addressed, and we had no difficulties because we were open, honest with them in terms of what the future was like for them, and they integrated really well. We constantly meet with them because, I mean, it's been a few months. So what we found too, that because we encourage them to give us feedback, because we know they were coming from another experience, and so some of our processes and procedures that they may not have been used to, They have helped us to improve our processes and procedures, right? So basically, it is a lot of communication, a lot of feedback, a lot of letting them see that we're not just listening to your feedback, but we're actually taking it on board and making the required changes. And I guess to that, kudos to the HR team here at NBD. They had the prior experience, and they were very sensitive. So we, in addition to having those conversations, we also had to provide them with the type of of support that they would need. In terms of support, I mean, like, sometimes you go through those transitions and you need some sort of support. And I'm talking about having a medical doctor on hand to support through any questions or challenges or things that you might not feel comfortable just talking to anyone about. So we had all these things in place to support the team. We also, what we did really well was not just, they were in their own branch, so we left them, most of them there, but we integrated some into the other branches based on their roles, and put some of our folks or higher performing staff members so that they could understand our systems. We had a lot of training for them. System training as well as training into our own cultures and so on. So that kind of really helped to manage the change. Yeah.
Okay, fantastic. Thank you so much for sharing, Annette. May I call on Joanna now to share your nugget of gold for anyone who's considering this path, as well as perhaps a shot as well at the change management and culture.
Okay, I think, my colleagues kind of covered everything. What I'll say is, if you, anybody who's going into a similar structure for acquisition as we did, that try not to go first. That's the, for conversion, that's the advice I will give. So.
What do you say? We were suckers, huh? Is that what you're trying to say? Vancouver were suckers?
Yeah.
You hear what she's saying about us, Everette?
Yeah, try not to go first so you can learn from the mistakes of the others. I don't think there's anything more. I think there has to be a level of readiness, I would think. Because you'll be taking on something that will be a complete disruptor. It will disrupt how you do things. It will change. You have to be agile. You have to be flexible. In the early days of the post acquisition, there's a lot of workarounds because RBC, their correspondent banking relationships had been terminated, and there's an issue of maybe adequate notice to customers. So there was that whole period, a whole month, where we were trying to work around things. And I must also give kudos to my customer support and my IT team as well. I think they did an excellent job during that period. But on the other culture thing, I would think it's important to take time to understand the culture that you're acquiring. I think also know your culture and to be able to identify best practices from both of them in terms of new culture that you want to adopt. And I think that is critical. Also, what we did too, we had a lot of meetings to address concerns, be open, honest, frank, because you have to establish trust from the onset. They have to understand that what you're telling them is actually factual and honest. So I had a lot of one-on-one meetings. I made myself available as a general manager. I must say after it, I was dead tired, but at the end of the day, I think that was necessary. We also have some change management workshops. Sorry about that. To kind of dispel the them against us kind of thing, because I saw instances where that was starting to happen. Mm-hmm. And after people attended those change management workshops, I think they kind of say, oh, I now understand that it's not only those coming in are affected, but we too have to understand how we relate to them affects them. So you come in and you have all this fear. You've been kind of like adopted by an indigenous bank. You hear a lot of negative things about indigenous banks. And there you are just thrown in the middle. So I think it's important to understand and also agree on the culture that you want to proceed with and adopt best practice on both sides. And by culture, I mean, not only, the way people do things, but also processes, procedures, policies, all of these things identify best practice. And I think that's an excellent opportunity to do that. The other thing I think is important, as Annette said, is to create an avenue to escalate concerns and issues. Another thing that we did is that we recognized that we were getting a lot of complaints from the legacy ACB staff saying they're overwhelmed, they had a lot of work, da, 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 da. So what we did, we reevaluated some jobs. We had done an exercise before. We did it to determine whether any jobs were impacted because of the additional volume, sorry. So that was done. And at least we wanted to do so that it seemed objective and scientific, that it wasn't, this one saying no, I'm seeing I have more volume. So it may not be that you need more money or promotion. You probably need another person to assist you until we can get this thing fully automated, that kind of thing. And the last thing for me, I think, is to create a culture of inclusiveness, I think, from the onset. If you have a structure where you have your different management teams, incorporate the managers into those teams so that they know right away what's going on. One of the things we did early was to share our strategic plan with them so that they knew where we were going, even if they were continuing with what they were doing. And like Annette, Grenada kind of stayed Grenada. Antigua, we had 1 or 2 exchanges going on so that they can get a feel for how things were done in the main branch. So that would be my contribution.
All right, great. That was quite a bit of sharing. Thank you so much. And Everette, since Dalton thought that you would have the most to say, I will give the last 2.5 minutes to you. Thank you.
Thank you, Wendy. Well, I think the others have covered most of it, but I will just emphasize 1 or 2 things. I think, as Annette would have mentioned, the transition team or the project team is critical. And we at our end, we must certainly commend our project team. We actually brought in someone to manage the project. We had a project manager and who had gone through that experience before of an acquisition merger. And so that, to my mind, was very critical. So you have to make sure that you have a good project team. One of the mistakes we made, however, is that we used our managers as the project to be part of that project team. And I believe that it would probably be important to actually take persons from their day-to-day work and put them on a project team. I think if we had to do it over, we wouldn't use our managers who are doing their day-to-day work to actually be undertaking the project. I think it's important to have a separate project team along with a project manager. And that, to my mind, was critical. The other thing that, of course, that was mentioned already is the whole issue of legal. Your legal team must be strong and they must be in from very early. They must ensure that all contracts, all agreements are carefully reviewed, because what we found is that every time we had a conversation, it was, well, go back to the legal agreement. That is what you signed. And so that is also critical from very early on. It's so important to ensure that, you have laid out very clearly and you clearly understand what the obligations are. As Dalton and Joanna said, the whole issue of expense was so critical, because every time we took a step, we were told no, but it's in the agreement, and so you have to pay for it. So that is so critical. The other thing I would say as well is in terms of the communication. You have to communicate from very early on. Unfortunately for us, we were not allowed to communicate with the customers and with the staff. But I think that in the negotiation, it is important to be able to communicate very early on with the customers, the large customers, and communicate with the staff. I think that would play a critical role. And just to emphasize as well, in terms of the vesting orders and having that discussion with the government and looking at the taxes that would apply, I think that is also critical, because that also held us up a bit. So that is very important. And just very briefly on the culture side, for us, what we would have done is we actually was in the process of undertaking our strategic plan, and part of that was culture. And so we actually had a consultant who was working with us. And as Joanna said, you know, we also had change management group sessions and sort of have a plan, a culture plan. So I think those things are important. Going forward, you know, I think as a group, just in terms of my wrap up, to say that as a group, we need to think very clearly how we move together in terms of collaboration. We spoke about things like technology. I think the technology is very critical. As Joanna said, we need to work together as not just the consortium members, but as the indigenous banks as a group. I mean, if we can get the technology part fixed, I think that is going to be important. The whole issue of shared services is important as well, because if we can have shared services, it helps to reduce the cost, and it certainly helps in terms of efficiencies. So I want to just wrap up on my own to say that thank you very much for having me as part of this panel discussion, and I certainly look forward to collaborating with my colleagues going forward. Thank you so much.
Absolutely. Thank you all so much for joining us this morning. I think that the discussion, Joanna, I think I'm seeing your hand. Am I right? Yes? Okay, go ahead.
Yeah, I just want to say that despite the fact that the conference is virtual, I still came to Saint Lucia just to feel as though I was in Saint Lucia attending the conference. And the good thing about attending from home, I guess, as same with everybody else, you can just throw on a jacket and wear your shorts and sit at the table. So that is the beautiful thing about it. So,
Joanna, I didn't know you could see through wood. You know, because I didn't know you could see my shorts.
I could.
I thought for a minute you would show us down below the jacket, Joanna.
I was going to, but I said no. Let me avoid the controversy.
Well, it certainly has been a pleasure, as expected, hosting you all this morning, and I think the camaraderie and the shared experiences will only add to the richness of the discourse and thoughts for anyone else who's considering the process. So now we're really pleased to say that we were able to bring you some of the very established banks, larger banks in the region yesterday. And of course, we're seeing the birth of what could be the future largest banks in the region emerging this morning. So you have at your disposal some real talent, some real thought leaders in the industry. Annette, we wish you every success with the next step in your growth mission.
Thank you.
And the CAB will certainly position ourselves as best as we can to support the needs that were expressed this morning, particularly from a shared perspective, as well as Joanna would have mentioned, being able to manage from a cost and scale perspective. So thank you all again for your time this morning. I hope that you're able to stay with us for more of the events of the day, particularly during the lunch hour. But as we move forward, we will be introducing the next segment. Have a wonderful day, everyone. Thank you, and stay safe.
Thank you. Thank you very much for having us. Thank you very much.
Thank you.